Good morning, everybody, and this is your S&P 500 day trade setups for today. So, big question: bottom of range, okay, or start of something bigger? Now, that's the range for me at the moment. It's fairly clear. You can see we sort of hovered in that area in February, and you can see what happened when we dropped below it. We sort of meandered down, came back to test it, and meandered down again. So, now is it more of the same, or are we looking at a big inverse head and shoulders? So that would be your left shoulder there. This is your head, and this is sort of 1, 2, possibly 3 right shoulders. Difficult to call it at the moment. We do have the Fed's interest rate announcement later on today, and we had a bit of a bank collapse yesterday, and JP Morgan picked up the bank pretty quickly, bought all the assets, but I'm glad I wasn't a shareholder in that instrument because that plummeted so quickly. Anyway, this to me is still a range. I'm not too concerned about this bar. It looks like an exhaustion bar to me. The trend is up. The warning was there with, as I said yesterday, we had that engulfing bar there. It did look like there was some kind of pullback happening, and we were looking for pullback onto structure in the uptrend for an opportunity to buy. Didn't really materialize. So you can see all these tails here, we dropped below them. That tail there is where price picked up. And this was happening quite often now on the S&P. It's always some tail that you're missing. So you need to just look a little bit further left. You can see that's actually a pretty strong level. I missed that completely. Let me just put it in and you can see what I'm talking about. So 1, 2, 3, 4 touches on that. So that was a pretty decent level. I was looking at these levels here. So I didn't look far enough back to the left on that. Anyway, lesson learned. So for today, I am probably just going to wait, because what's going to happen here is we're going to find some level and we're just going to sort of bounce around in that structure. And there is a zone in the middle of this range. So just take the top level and the bottom level. You can see that's the zone there. So I suspect this is where we're going to play today. Just bounce around inside here until the Fed's announcement is out of the way. Don't see much structure. Maybe what we should do, just use levels. So you can see that's a fairly strong level that we have here, but we didn't adhere to it. So we're above that at the moment. And then your next fairly strong level, let's just do the zone again, is like that. So if we reject 41.47 and 41.42, basically 41.50 area again, we've been talking about that level for quite some time, then I would expect another move down into this zone. Okay, now if you look at this on the 15-minute, yeah, hindsight is always a perfect science. You can see we've got a crossover on the 15 minutes yesterday, and yesterday I was looking for a move down for a bounce off structure for a rally. Okay, now you can see there below the moving averages, not much. I mean, any one of these tails would have been the opportunity you were paying attention to. So there was a short opportunity there. If we had those 15-minute levels in, there was definitely a short opportunity there. Would have looked at it as a short scalp, but if you look at it this way, 117 point stop loss, and it's sort of going nowhere, and then boom, 700 point gain. And if you just drop down to the 5 minutes, you'll see a little bit of a different picture, because inside the 5 minute, these levels here were your entry. That would have been your 15-minute entry. Could have been a 5-minute entry as well. Let's move that down to there. You can see that was where support was found. Still not enough. You can look there. There's quite a bit of structure there. fairly close. So yeah, it's always good just to do a little bit of back testing on the previous day. I think you've noticed I do that every morning, but just to validate what trade we missed, why we missed it, and what triggered those trades, or alternatively to look at what trades were successful and also what didn't work. So that was a fairly strong 5-minute zone there. And if I look at this on the 15-minute, you can see there it is there. So that is a very strong zone that we dropped below day before yesterday, and we came back to test it. So in hindsight, we should have been looking for a continuation down from this area here. Only if we'd got above that and found support should we have been looking for long. So anyway, that's kind of the way we looked at it. At least we didn't get trapped because we didn't really find any support on any of these levels, the downside. So for me today, it's sit on hands until the Feds are done. I think that's the moral of the story. Not really interested in jumping into this until the Feds are finished. And then just a little bit weary with what's happening in the banking industry at the moment. So the bigger banks are saying everything's sorted, but there's definitely one or two others that have been hidden from us at the moment. So I think I will be very cautious and wait this one out. And more than likely, you're just going to see this thing go flatline now until the Fed's announcement. You're not going to get much opportunity until then. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.